Hello, I'm Stock Options Coach Jay Johnson Jr. And I want to share with you a little bit about stock options, what they are, how they work. So we put together this short video. So I hope you enjoy it. Let me know how you like it. Stop by the website and leave us some feedback. Alright, hope to hear from you soon. Stock options are a fantastic way to leverage your money on the stock market. You can create some pretty substantial gains using options. It's really common to hear about people turning a little bit of money into a lot trading options. Now, at first glance, options can seem really complicated and really hard to understand. And there is a lot of risk involved with trading options. But the best way to reduce this risk is to get a great education and know exactly what you're doing when you're trading options. So that's why I made this video, to give you a better understanding of what stock options are and how they work. Let's start with some characteristics of an option. All options are connected to a stock. Not all stocks have options. Options are purchased in what we call contracts. And one options contract controls 100 shares of stock. All options have an expiration date, and contrary to popular belief, you can sell your options at any time. The definition of an option contract is a contract that gives the owner of the contract the right, but not the obligation, to buy or sell shares of a company at a specific price by a predetermined date. There are two types of options. You have your call options and your put options. Call options increase in value when the price of the stock goes up and decrease in value when the stock goes down. Put options decrease in value when the price of the stock goes up and increase in value when the stock goes down. That's one of the great things about stock options, is the ability to profit whether the market is going to go up or whether the market is going down. It's really easy to make money with a falling stock using stock options. All you do is purchase a put, and as it says, it's going to go up in value the more the stock goes down. Put options are going to give you the right, but not the obligation, to sell shares of a stock at the strike price. Call options give you the right to buy shares of stock at the strike price. Now, the strike price is the price that you're going to agree upon before you even purchase the option. It's how they sort the options. They go according to strike price and the month that they expire. Now, I'm going to show you a slide that has an actual stock option on it so you can see what they look like. Now, when you look at this slide, the ask is the price you pay to buy the option contract, and the bid is the money you would receive per contract if you were to sell the contracts that you own. And like we said before, one options contract is equal to 100 shares of stock, controls 100 shares of stock. So you're going to take the ask and the bid and you're going to times that by 100, and that will be the money that you would pay, or the money you will receive from either the buy or sell of the actual stock option. Now I'm going to give you an idea of how much leverage you can get using stock options. This is a snapshot of what Apple did during this trading day. The stock went down $10.95, which is a 2.7% drop in the stock price. As we said before, a put option increases in value as the stock goes down, and that's what happened during this day. So we're going to take a look at one of the put options for Apple and see how much money you could have made based on this 2.7% drop in the stock price. This option went up 276% based on a 2.7% drop in the stock price. Now if you look at the bottom left, the bid is $4 and the ask is $4.10, meaning if you wanted to purchase this option, you would have to pay $410 per option contract. And if you already own this option, let's say you bought it yesterday, where you see the previous close was $1.09. So let's say you bought this yesterday for $109, which would be $1.09 times 100. You could sell it, you could have sold it today before the market closed at $4 per share, which would have meant you could have sold it at $400 per option contract. So you could have turned $109 into $400 in one trading day. And that just gives you an example of the type of money that can be made with stock options. Now, you're not going to make this type of money every day, and along with this comes a lot of risk, as we said in the beginning, but a great education will eliminate a lot of the risk, and then you'll be a lot more comfortable trading stock options. So that's a basic overview of what stock options are and how they move. If you need more information or you are now interested in stock options, feel free to go to the website www.jjohnsonjr.com. There's a lot more information there and a lot more videos that will go more in depth into what stock options are and how they work. Alright, I hope you enjoyed it. Have a good night.